They say technology makes our lives easier. For work, to learn, to travel, to communicate. But there are things that machines cannot yet do. Things as important as engaging, putting themselves in your shoes, having intuition, or making intelligent decisions. In an increasingly technological world, we need professionals who provide intelligent solutions based on their know-how. Because there are things that technology cannot yet do for you. The human tech.
Good afternoon, everyone. Thank you very much for joining us today on the 22nd of May, 2024. Today, we're going to talk about a subject that I know we don't like much about paying taxes, but we're going to talk about income tax, wealth tax, and solidarity tax, which a lot of people might not know what it's all about since a new law that came into force some months ago in 2023. Okay, let me introduce you into the panel. I have on my right hand Pedro Heredia from Heredia today. Hello, Pedro.
Hola, Ignacio. Good afternoon. Hello, everyone.
Right. We don't have Michael today because he's been very busy, as we have all been. I'm sure Pedro had a busy day as well, but we're trying to make an effort to give you updates on the law and to give you updates about the subject, which is today about the income tax return. Let me introduce you today a little bit about what is income tax. Then we could jump into wealth tax, and then we could talk into solidarity tax or non-resident tax. Now, I'll be grateful if you could send me, please, where are you contacting us from, so we could understand the subject, the issues that you might be concerned of. Okay, so feel free to use the chat and please send us your questions. Okay, and then we will have Guillermo as well to try to answer as much as possible. You could send us general questions. If there are too specific, we're not going to have probably the time, but we could organize a video conference with you eventually to work out the specific about what is your tax situation if you decide to become a tax resident in Spain. Okay, are you ready for it then? Let's go for it. Okay, you are coming over to Spain and you're thinking about moving to Spain and you decide to spend more than 183 days, you are considered to be tax resident in Spain. How is that? Very simple. Some of you might be thinking about getting your golden visa, getting your non-lucrative visa, or you already have a visa that entitles you to come over to Spain. If by any reason you came last year and you spent last year more than 6 months, this means that you have been a tax resident in Spain. Now, some of you might be in the gray area and you may use the dual taxation treaty between your home country and Spain. So 2 important issues now. 1, have you been more than 183 days? 2, what country are you contacting us from? And what are the speciality or the specific situation about your tax situation? Talking about tax is difficult because sometimes you might say, well, this friend told me and he's paying that amount of tax. I really encourage you to talk to your lawyer, to your tax advisor, and to tell them only about your specific situation, because it's hard for us to understand, but my friend paid his tax and I don't know, but well, it's very easy to say general, but we need to be specific, and we're happy to tell you the answers. Okay? Now, once you are more than 183 days, then you have different obligations. You've got from January to March 720 form, which you will need to declare. Doesn't mean paying taxes. Declare whether you have more than 50,000 euros abroad, bank accounts, property, or just stocks and shares. Okay, it doesn't matter whether you're joint or you're several with different clients, different people. You must submit that declaration. Okay, that's January to March. Then you have April until June, you have two important subjects here for you to remember. One is Modelo 100, which is income tax return. And then you have the wealth tax, which is another tax only in case in this community now, Comunidad Valenciana, if you have above your main property, obviously you've got an allowance of 300,000 euros per person, 500,000 euros on top. Okay, so only for those people and for those community that you're living in, it will apply the wealth tax. Okay, and then the rest of it, for those are non-resident in Spain. Okay, right. Let me just guide you a little bit here more about income tax. Then Pedro will cover the wealth tax, and then he will just mention as well about the solidarity tax. With regards to income tax return, in my general advice, if you only have a pension from abroad, no over 15,000 euros, it's very likely you don't need to pay tax in Spain. Don't get confused. That doesn't mean an allowance. That means an obligation. I know it's hard to understand because some countries have some allowance, but in this case, we're talking about an obligation, right? So if you're, let's say, for example, you've got income from interest and you have income from rent or from different points, you might be obliged, but you are not about to pay. So there is no tax. Now, another important question that I will say, well, let's say you have income from work, you've got income from investments, right? Then you have income from property as well. And you have even civil service pension. All that needs to be reflected in your income tax return, right? So it is important for you to disclose all this information and then inform the advisor, your lawyer, about that. Some of you might be saying, Ignacio, I'm paying taxes because unfortunately I still get these. You get normally you are still unfortunately paying tax in your home country by mistake. Okay, there are forms that you should inform them that you are a no tax code, and you need to inform here that you are a tax resident here. You shouldn't be paying double. So it's important for you to inform that you are a tax resident in Spain and you shouldn't be paying in your home country. Okay, so the bottom line, as a principle, you don't pay double. You deduct it. Okay. For the Americans, they have Social Security Service. We need to understand, very important is for us to have a draft of your income tax return. In general terms, I will recommend people to provide us the draft income tax return for us to be able to analyze and do it according to this the dual taxation treaty. So for those who you are living more than 183 days in Spain, you have income from work or pension. Then you have income over 1,000 euros from interest, okay? You've got income from property, or you sold your main property. That's another important topic here. Is it worth doing it now? Shall I do it next year? Can I do tax planning? Highly advise, do all your business before it's too late, okay? Tax planning is always cheaper than doing it after. This is a very important advice I give you. And you will appreciate that once you've got the information in front of you. Right, let's say, Pedro, let's talk. We already have income from work, we have income from property, income from interest. And depending on the age that we are in, we are deducting that. I know in Spain is very, very complex because some people say, okay, Ignacio, what is the allowance here? Well, the allowance is 6,700 plus 2,000 euros, so 8,700. So I knock it down from my income. I have a 30,000 euros, I knock it down 8,000, and that's a tax. It doesn't work like that. It's a bit more complex. Unfortunately, it is. You do your tax return according to 30, and on the allowance, you do whatever you should pay on that allowance, and then you compensate from one figure to the other figure. Unfortunately, it's not as simple as it sounds. Okay. Now, once we have been here in Spain, whether we've got with the golden visa, with the non-lucrative visa, with whatever visa you have, European visa, etc., you're saying, Ignacio, I've got in my share more than 300,000 euros, fine, on a property. That's an allowance, 300. And then I have another 500,000 euros invested in stocks, shares, investment, pension funds, etc. And I need to pay wealth tax. Okay. That in some areas like Andalusia or Madrid is tax-free up to 3 million euros and the allowance of 700,000 euros. Or in this community, so far, we've got the allowance of only 300 on the main property and 500,000 euros. I'm going to pass over to Pedro to tell us a little bit about what it is, the wealth tax, what does it consist, who apply for it, and the wealth tax or solidarity tax. Over to you, Pedro.
Thank you, Ignacio. About the income tax declaration and about wealth tax. At the end, in some ways, it's connected. Obviously, wealth tax is subject to what assets do you own. If you are non-resident, what assets do you own in Spain? And we call it the obligación real, which is like on property in this case. If you have a property as non-resident in Spain and non-tax resident in Spain, if you own a property and the individual value is more than 700,000 euros, then it starts to affect into you to prepare the wealth tax. But if you are resident in Spain, obviously then it attracts to all around all the worldwide assets that you may have in Spain. One of the issues, obviously, that someone, in case is obligate to prepare the wealth tax, has already done, obviously, the Model 720, Model 70, when someone has obligation to declare those assets that each pillar, bank account, investments, and policies, insurances, is over 50,000 euros. Those one has to declare. So it will be included, those ones, at the date of 31st of December from the previous year, and also whatever assets do you have in Spain. Wealth tax at the end, it values all the worldwide asset values, and it is important, charges. I mean, you have debts. So it's values minus debts. And if there are different regions in Spain, if you are resident in Spain and the region where we are right now is the minimum exempt is 500,000 euros, and also is exempt the value of the property where you live up to 300,000 euros, then we are able to calculate wealth tax. But in Valencia region, as Ignacio has said, there are 2 regions right now. Well, I would say 3. Also, Murcia is gonna be like that, and Madrid, Andalusia, but Valencia region, Comunidad Valenciana, where is Valencia and Alicante area, Costa Blanca, it was announced by the politics that it was going to be eliminated. It was going to be, let's say, erased. So from last year, it's compulsory. So now is the time to make the declaration and pay accordingly the wealth tax. At the same time, a period of income tax return. And this year, so next year, will also be compulsory. But we understand that this year, at the end of this year, will be rejected. For next year, 2025, the year 2025, we expect that it's not going to be compulsory, it will be eliminated. So wealth tax at the end is something that affects just because you own assets. And obviously with the valuation of assets is something that at the end of a year, 31st of December, property is we include a property of purchase price. If has to be also in some ways adapt in some terms. Always we include on the wealth tax these values, obviously the debts at the end of 31st of December. Someone has died before the 31st of December, obviously will not be obligated to make the wealth tax in these cases. Okay, and then Ignacio has already mentioned about the solidarity tax, el impuesto de solidaridad y grandes fortunas, which means it's like for the rich. He says, oh, this is for the rich. Well, just to put a number, in 2022, it was applied, it was get by the tax office 623 million euros, which is nothing for, in terms of taxes, it's nothing. It's a tax that affects really a few people, is really a few, it really affects to the regions that is not the wealth tax compulsory, Madrid and Andalusia. And it starts really from 3 million euros, but also the minimum exempt is 700,000 euros. So it really starts from 3 million and 700,000 euros. From that point, it starts to be a wealth tax, was it like a solidarity tax? And if you have wealth tax and solidarity tax, wherever it is paid in this wealth tax is reduced on the solidarity tax. So it's deducted. So you don't pay double on this. This is the same because it really charges you really in the same terms. It goes from 3.7 million euros individually. It goes from 1.6 to it's 1.6 to 2.10, and the other figure is from 10 million euros. I think it's 3 point. I don't remember. I think it's 3.5%. So it's like an scale. It's good point is to know what is the valuation of this, obviously, in terms of reducing the base. In terms of Ignacio, one thing I would like to mention, I don't know if you mentioned that about the deductions or reductions that we have on income tax declaration, in order to reduce obviously the base. We have some reducings in terms of income, but deductions on investing on making some works on a property and also on solar panels, also to put the efficiency on your property, you can get a good deduction in order to pay less taxes. So it's also something which is new in this case this year. So it's something that if anyone made an investment last year, so he's going to be able to make some deduction this year and the following years also. We'll be able to be included as a maximum of 5,000 euros deduction on the income tax declaration. So wealth tax is compulsory, but also solidarity tax is also something that, even though it was a litigation, it was some resolution by some tribunal in Spain, at this time it's going to be happening for the following years. And in Valencia region specifically, we understand wealth tax is going to be eliminated, but solidarity tax will not. So will happen in the following years. We cannot listen to you, Ignacio.
Sorry, Pedro. I was wondering, could you give us a little bit of information about what is the Beckham law for those who are trying to relocate into Spain? They might be very lucky because they're working from abroad, or they are the ones with nomad visa that I know you've been dealing with a lot of cases of nomad visa. What will you say to these people trying to relocate? They're non-tax payers here in Spain, but they're willing to do it. How can they comply with the Beckham law?
Yeah, I mean, it was some changes on law. We have some in order to increase the entrepreneur business to entrepreneurs in order to start business in Spain and attract international investments in Spain. It wasn't also included, and it was changed some specific article on non-resident tax, because before last year, we had obviously those employees from companies around the world, multinational companies that has a base in Spain that could move into Spain and could be attracted to be resident in Spain, but be also at the same time treated as a non-resident for tax purposes, which is, I understand, is really, really good in many occasions, because you can have access to this special treatment on taxes, have a flat fee on taxes of 24% of your salary, and just your salary, and any other income that you may get from dividends, interests, capital gains, any withdrawal, any investment, any pension, whatever you get, will not be taxed at all in Spain. Will just be paid in Spain 24% of your income, of your salary. So this obviously is well connected with a nomad visa, which is an immigration tool. You get a visa because you want to work remotely in Spain. You're an employee of a company and you want to move in Spain. There is no base in Spain about that company, but you want to move and work remotely from here to your company abroad. That's perfect. And you can have access to this special treatment and treated as a non-resident for tax purposes. You become resident, but you are treated as a non-resident. 24% flat fee. I think around 40,000 euros, more or less, you start to increase this 24%, so it's benefit those ones who have more than 45,000 euros income. Then it's better to get this access to this income. And important, dividends, interests, any other income that you may get for anything will not be paid at all in Spain, which in many occasions is higher than some other countries.
Pedro,
Mhm.
Pedro, Alex is asking that you say that the wealth tax will be eliminated in Valencia by the end of the year. He's not sure of that. Could you clarify that?
Well, no one
He
has a
said-
crystal ball. It was announced. It was announced by the political party before the elections that if they win the elections, they were going to do it. And at the end, they won elections. They promised two things about taxes. Well, I think more, but let's focus on that, on two. It's inheritance tax, to reduce it as maximum as possible, which they do it with the family members, 99% reduction. So the quota right now between spouses and descendants, parents, is the reduction is quite big. Is in many occasions is some hundreds of euros to pay. And the other one announcement was to eliminate wealth tax, as it was done basically by the same political party in Madrid and Andalusia. They announced, but they still have not done it. Why they have not done it? Well, my impression of what I've read, and as far as I know, is that they want to do it in terms of, okay, well, they eliminate the wealth tax, but they want to do it in a way that they do not want that those people that are subject to pay taxes on solidarity tax, at the end, they will pay it to the government and not to the Comunidad Valenciana. So they want, if there is something that needs to be paid, they pay to the Comunidad Valenciana and not to the government. In terms of that is what I said. In case someone has to pay some money, obviously they want to say, okay, you pay something here in the Comunidad Valenciana and then the rest in the, so it's as a solidarity tax in the government. There are some regions that have done it that way in Balearic Island. Some other ones are trying to change these rules in order to get less to the government of Spain and more in the regional. But obviously, I don't have a crystal ball. They announced that all the tax advisors, we understand it's going to be done or be approved at the end of the year, but no one has a crystal ball. It's been announced, it's been promised. We understand that they're going to do it. And we expect that it's going to be done at the end of this year for next year. But obviously, I don't have a crystal ball.
Pedro, Gary is asking here just basically about the possibility of how do you work out the tax on English house sales as a Spanish resident? So let's say Gary is Spanish resident and he's selling a property, a second-hand property. I mean, obviously, the ideal, if we're talking about main property, if you sell it before you're being tax resident, it will not be taxed here. If you sell it to reinvest it here, it will be not taxed here as long as you reinvest it all. Or if you sell it, your second home, obviously, you will pay a sliding scale on 19, 21, 23, 26, 28. But Pedro, what do you think? How do you work out the tax on the English house? That's what Gary is
well,
basically
that's a good question.
saying.
It is, I mean, with a double taxation treaty between Spain and many other countries, as well as the UK. I mean, if you move to Spain, I mean, it looks like he's a Spanish resident. Firstly, we need to check if the property was a permanent home in the UK, was living there at least more than 3 years before they moved. And once you land into Spain and it's your first day of residency, you have up to 2 years to sell a property and maybe reinvest. Maybe Gary bought a property in Spain in order to reduce the capital gain tax in case it was. But as a resident in Spain and you get a capital gain anywhere, at the end, it's compulsory to see the rules about capital gains tax, in this case, in a property. And because it's compulsory at the end to pay taxes in Spain in this case. If you maybe get these benefits on selling a property that was your property home and then reinvest it, and maybe you bought a property in Spain, obviously you may get a special benefit on this. But it's something that house sales, and you don't, I mean, obviously you will not be paying double taxes. You will be paying taxes in the UK and whatever is paid in the UK, you will deduct it in Spain. Just as an example, in case you pay, for example, 6,000 euros in the UK, and then you have to pay in Spain 10,000, you will not be paying 10,000. You will be 10,000 minus 6,000, which is 4,000. In order to avoid double taxation. But obviously, we'll have to be, as a resident in Spain, you have to declare and pay all worldwide income, and capital gain selling a property is a worldwide income.
Pedro, we've got Ian. He is basically just in general asking for general question here. He's interested in the ISA, personal pensions and house renting in the UK versus selling UK home before coming to Spain. Well, my understanding, Pedro, if there are no tax residents in Spain, there is nothing to worry about. If you're selling your main property, is not an issue as long as you are not tax residents. So I wouldn't think there is any tax issue. Now, ISA, personal pensions, house renting in the UK, my understanding, Pedro, is that will be taxable in Spain. If you're selling before you're a tax resident in Spain, it's not an issue. But the income from rent, I always say, as long as you don't want to sell a property, Pedro, I think it is very good, tax efficient in Spain, because 60% of the net is tax-free, 40% is taxable. So what kind of investment does it make you a 60% off situation? There is nothing to compare, even though you do invest in investments and things like that. On your net profit of renting, 60% is tax-free, which is very good, isn't it? That's why I normally say to clients, if don't really need the money, because if you sell, you're going to pay a sliding scale, a lot of tax. But Pedro, what could you tell us about ISAs or personal pensions? How is it taxed in Spain?
Yeah, it's a fantastic question. I mean, obviously, I will focus on the selling a UK home before coming to Spain. Okay. You already mentioned at the beginning, if you live in Spain more than 183 days in Spain, then you become tax resident. So imagine that you sell a property in January and you become resident in March. That selling of that property before you became resident in Spain, it will attract you to your tax year because you will be tax resident in Spain. So the year that you sell the property, you need to be in some way, or you need to know what is the scenario. You need to understand if you are tax resident or not. If you, let's go again with this example. You sell a property in January, you come to Spain in March or April, and then you buy a property. Well, I mean, obviously you may get the benefits on reinvesting the property, but obviously it will be compulsory the capital gains tax. If you sell a property in December or November last year, and then you become resident in January, nothing to worry, nothing to do with the Spanish tax office at all. If you sell the property in January, February, but you became resident in July or August, at the end, you can prove that you stay less than 183 days, nothing to do with Spain, because that year you will not be tax resident in Spain. You will be non-resident for tax purposes in Spain. So this pillar needs to be understood and see planning what is going to be done. I had last week an appointment that it was like, wow. I mean, someone, an American that, in this case, came to the office, first appointment, became resident or tax resident last year, never checked anything about tax issues. And it was like they became resident, they took some money from some investment in order to buy a property. The problem, or I would say that the bad issue, the bad planning to prevent that is that money that was taken out it was included as an income in the US tax office, but also in Spain. And in Spain, it was taxed a lot. Imagine that you withdraw a lot of money to buy a property. To buy a property is like, we are talking about more than 400,000 euros. Well, the damage on that is incredible. If would have been done some months before in the US in December, before becomes resident, before becomes tax resident, will have saved, in this case, will have saved a lot of money. So it's important to understand the timing. It's important to understand when you sell, when you move, and if you move, if you are tax resident or not. And regarding the house renting, in, as you said, it's fantastic. It's a long-term contract because the reductions on this is the deduction, is quite big, and obviously the ISAs is saving investments. Whatever is withdraw, obviously will be compulsory. Whatever is the income on this, and then personal pensions, private state pension, it will be included as a income, full income. You have to receive it gross, not tax deducted in the UK. We have to declare it and pay accordingly in Spain.
It's very important, Pedro, for those who are doing the planning to move on, or just for you guys who are trying to know how much money you're going to end up paying next year. There is a lot of, I always tell to clients, okay, you want to control your tax affair is basic. You do a preparation 1 year ahead. So if you basically want to say you've got a state pension, you've got private pension, and you want to control it, as I said before, the basic advice, if it's below the 15,000 euros and you don't have any other income, you're not going to pay any tax because you don't reach. Now, if you have extra money with regards to property, as Pedro said, or interest from the bank, etc., there is more tax to pay. Now, you have the handle. You could have full control. Okay, that's important, because this is what I'm telling you. You may be saving a lot of money under your own control. Okay, I always insist on that. After we have committed to a situation, the tax you pay is X. If you have no control of it, then you better save it and put it away. Because in Spain, the issue that you have, since the pensions are coming from abroad, the government is not taxing you at source here in Spain because they don't have full control of that pension. Therefore, when you have to do the income tax return, they're going to tax you all in one go. The payments that you need to make are two-stage payments. 60% of whatever tax you need to pay is on the 1st of July. And the 5th of November, you'll have to pay the other 40%. Okay, except the civil service pension. As I mentioned before, the civil service pension is taken into consideration in this tax declaration only to work out the tax scale, right? But on that particular pension, you will not be paying tax in Spain. You'll be considered to have a bigger income, and more money, and a tax rate according to your total income, but that percentage will be taxed on your home country. Now, we've got some questions here, whether there is a dual taxation treaty between US and Spain. The reason is yes, obviously, we do. And if you go into our blog, you will find the dual taxation treaties with a lot of countries, okay? So that's just a piece of information. Now we have Peter Moore here as well, saying hi. And Pedro, I think we received one from Martin. I arrived in Spain the 10th of March, 2023. Do I become a tax resident 183 days after this date? Well, I'll keep it very simple, Martin, here. You spent your immigration papers, because some people are getting confused. You might be having a golden visa. You have a permit to come over to Spain, but you don't stay in Spain more than 6 months. Now, bear in mind, this is a matter of evidence and proof. This is a self-declaration. The tax office could always send you a letter and tell you, could you please prove this? Could you prove that? Okay. So, Martin, you were here in Spain more than 183 days. After that you arrive, then you should be informing the tax office about the tax regime that you are in, a fiscal certificate, fiscal resident in Spain. Okay. He says, Pedro, well, Peter is saying, does that mean that wealth tax return for resident is only over 800? No, I mean,
it's 500,000 euros minimum exempt, and also could be include your permanent home up to 300,000 euros
per person.
Yeah.
Per person.
Per person,
Correct.
individually.
Right.
I can see some question from Margaret. It's an English government pension subject to Spanish tax. It is subject to be declared. Well, sometimes it's not an obligation to declare, depending on what other income you have, but it's exempt. I mean, government pension from UK is exempt. It has to be paid at source. It has to be paid in the UK. And in Spain, in some of the cases, some cases needs to be declared, but it's exempt. But it's not purely exempt. It's exempt, but this may be added to the rest of the income you may have, which increases the percentage to be taxed to the other income you may have. So it's not taxed in Spain, it's exempt, should be paid at source, should be paid in the UK. Normally in all the convention between Spain and some other countries, government pensions are paid in the home country, not in Spain, but it's included in the declaration.
Right. Okay. So basically here, Pedro, Peter is asking as well. I don't know if he's been clear enough. Once you are a tax resident in Spain, you pay here. Whatever, according to the dual taxation treaty, is accepted to pay in the UK. For example, you're renting out a property in the UK or US or any part of the world. Okay. That should be taken into consideration here. And we will deduct whatever tax as a non-taxpayer in your home country you do pay and is deducted here. Okay. And that the net figure is what is going to be taxable. 40% of the tax will be taxable, the rest if not. And then we will offset the tax you paid in your home country. Now, Simon is saying, Pedro, I'm the sole director of a UK limited company and pay UK company corporation tax. How will this change if I become a tax resident in Spain? Am I only taxed on money brought into Spain? Well, my answer, Pedro, is yes. I mean, if he decides to get a salary or dividends or income from work, from his work, because the UK company tax is going to be carried out in the UK, so the company will not be affected. But you can have full control here, Simon, of your salary. That's why I say if people could have the full control of their private pension, and they could pretty much fit on with the allowances and with the time brackets and the tax regimes, you can have full control. So Simon, going back to your question, the answer is you will only be taxed on money you bring into Spain. Okay? Well, not you bring into Spain, the money that you cash in, whether you live in the UK or in Spain is irrelevant. But just whatever you cash in as a salary, you'll be taxed.
Yeah,
Pedro, yeah,
that's correct. I mean, obviously, if work to be done maybe is in Spain, but maybe he has to travel a lot to UK in order to do this work. There's also an exemption on this. This 60,100 euros, 60,100 is exempt in terms of during those days that you are there and the income that you get there in the UK about this kind of job. Anyway, but it's something that we should in this case is just to check personally in a private appointment.
Pedro, Ian is saying that he's married to a EU citizen, he's a Spanish resident, and then apply for residency. Well, I guess Ian has applied for residence as a European citizen. Okay, but is it the immigration automatically become a tax resident, or does the 183 days rule apply?
Yes. I mean, do not automatically become tax resident. This special tax rule is a general rule is 183 days per year. It is correct that if you are married to someone which is resident, but let's say by defect, I don't know if it is a translation, but it is a matter of, as it is supposed that you are resident in Spain and tax resident in Spain because you are married with someone which is resident in Spain. But obviously, as a matter of proof, if you prove that you are not being tax resident because you do not live more than 193 days in Spain, then it shows that you are. There's another rule that is also I would like to mention sometimes. It's like a centro vital, no? It's like your vital, really economic, social. Where are you connected with in terms of economic, but in terms of social? So if all your connections, all your assets, all your investments, everything is in Spain, and your wife lives in Spain, and well, at the end, even though you show that you've been 184 days outside, it's something subjected also in order to tell. But the general rules is 183 days in Spain. Okay.
Pedro, I've got a question with regards to wealth tax. What about the mortgages? Could they deduct
Yeah,
that as an
it's assets. As I mentioned that charges, debts. I think I said the words debts. I mean, you have €1,000,000, but you have €1,000,000 on a mortgage and debt, then you don't have to declare. If you the limit is whenever you have like €2,000,000 assets, but even though you have, let's say, have 1.5 debts, even though you are not obligated to, because the minimum exempt is €500,000 in in the Valencia region, you have any way to declare that in these terms. But obviously the debts must be included.
Mm-hmm. Right. Pedro, have you picked anything extra we need to clarify here, or shall we carry on?
Let me carry on with
the questions. Okay. Now, I'm not sure here. Lily's asking, how much do you need to live in regions like Madrid or Alicante? My understanding, Pedro, is that is a minimum of, well, relocating, isn't it? To be able to, for the extent of wealth tax. Let's say if I relocate into Madrid, my understanding is I sold the US or the UK and I move into Madrid. I don't know whether Lynn means about living in Alicante, moving to Madrid. Tell me a little bit more about it, Pedro,
I mean, the question, as I understand from Lynn, thank you, Lynn, by the way, how long did you have to or have lived in the regions like Madrid? Or again, you need to be a resident in an area. At the end, resident in Madrid or Alicante, I mean, to be able to get exemption on wealth tax. You have to be resident in this case. You are resident, so as a resident, you are exempt on wealth tax. In this case, in Madrid, it's still not in Alicante. In Madrid, Comunidad de Madrid and Andalucía. It will be in Alicante, hopefully next year.
My understanding, Pedro, if there are...
Yeah, sorry.
Yeah, my understanding, Pedro, if they've got a residency card and they are in the padron, and they just prove they're living in that place, they should be registered in the tax office straight away, and then prove is their home. The problem will be if they have two properties, right? Let's say one in Javier, one in Madrid, or one in Alicante, and then trying to prove that probably could be a bit more picky from an evidence point of view.
We have clients from northeast Spain, from Madrid, they come here, they have two properties, and they want to attract to the best benefit in order to, in terms of taxes. Yeah, obviously, where is the padron? It's a matter of proof at the end, where is really living, and which property is really connected and where is really living. And tax office applies for invoices of water, electricity, is it a rental or not? Or, I mean, it's like, which is your permanent home? But yes, that's the question. And Jillian, you have to, the regions in Madrid right now is exempt. Obviously, the solidarity tax is not. Is compulsory and is applied.
Yeah, for people that still don't understand the solidarity, well, Pedro already informed, but just again to say, some regions have the wealth tax, and if you're not having a region with wealth tax, it then goes into solidarity tax. Okay, that's the bottom line. I did post you here a message about the wealth tax, and in the same article we wrote, you will see briefly about solidarity tax. Okay, Pedro, more things about that. You already mentioned that solidarity tax is a state tax, and wealth tax a regional tax. Pedro, you mentioned that, yeah? Right.
The questions are, I mean, solidarity tax at the end is being made in order to compensate those regions that different political parties. This is really a war between political parties. Some political parties, like PP in this case, is eliminating absolutely wealth tax, do not want to intervene on the assets of people has a worldwide. It's a private situation. And the PSOE, PSOE, they want to intervene on whatever it is. So they want to say, well, you don't pay taxes there, but you're going to pay a tax that I'm going to approve. And they did it. And it was really approved 3 days after they approved it. It was like applied to people for that specific year. And solidarity tax, it comes individually to those who have assets, value on assets on the 31st of December, over 3.7 million euros. 3.7 million euros, okay?
Pedro, let me just clarify one thing. Brian is saying here, well, let's say we are resident, we own a sole main property in Spain, and only have up to 300 or 30,000 in pension as a couple. Right, Brian, it's important in Spain, you could use the possibility of doing the income tax return jointly or individual, depending on your allowances, which in Spain are only personal. I know in different countries are just a flat fee is £12,000 or X amount of money in dollars. In Spain, it's not like that. In Spain, it really depends on your personal circumstances. The older you are, the more allowance you get. The more family members you have in your family home, the more allowance you have. The less income your husband or your wife has, the more allowance you have. So it's a very difficult one to tell you an answer here about how much will you pay, because I really don't know, right? But we could work that, Brian. We could work that for you and do a simulation. Right, Pedro, he's asking if you're aware a dual taxation treaty between Spain and the US. He's a tax resident in Spain. You have capital gain in the US. Will pay capital gains tax in the US. Will I file a tax return there as well as in Spain? Well, this is a very important question, isn't it, Pedro? Hans at 6 o'clock. He mentioned. Hans, I'm not sure if you're a tax resident already, if you have full control of your situation, but it's really worth doing that simulation, even though it's still not the due date for you to lodge your income tax. Now, if you're a non-tax resident in Spain, there is nothing to worry about. But if you are already a tax resident in Spain and you made capital gain in the US, technically, you should do your tax return first in Spain. So in general terms here, Hans, you ask for an extension in January, then you do your Spanish in April, and then you submit in the US Spanish, then you work out the American, okay? And if there is any extra money you need to pay, then you pay. Now, for us to be accurate and be able to help you, in general terms, I always ask for the draft income tax return before we meet each other. So we have your draft, which you haven't lodged. We understand your American income tax, and then we submit here according to the dual taxation treaty, and we will offset whatever tax is compulsory to be paid in the US. Okay. Right, Pedro. I think you went over a government pension.
Yeah,
right. I don't know if
I
don't know whether she means civil service or government pension, because the state pension is a government pension, isn't it? But the civil service is what is tax-free in Spain in a way. I mean, at least let's call it properly exempt in Spain from that. I still consider it's unfair because you need to put it all together, right? But sometimes there is a good, let me tell you here, Margaret, there is a good position for some clients that only have one private pension and one civil service pension. This is excellent because the civil service pension is exempt, and the second pension, if you don't reach 15,000 euros, then probably you're not obliged to submit it. So there is possible a scenario there that might be very efficient. I don't know whether it's your case. Again, as I said, better to do tax planning. Pedro, any more questions from the floor here?
Okay, I'm just having a question from Katie. Is a property value at the purchase price or the current estimated value? When I understand is in terms of wealth tax. There are like three kind of values that we need to check, and will be the highest one. Will be in terms of valor catastral. Valor catastral, I mean, if the property is in Spain, is a value which is appears in the consent tax. Normally is very low. Normally is lower than the market. Then of the catastral value, then we have another value to check and compare, which is any value that the tax office has checked. Normally is not checked. Normally has not been checked. Has not been inspected about the value that you declared on when you bought a property, for example. And the other value, which normally is that value, is the price or the purchase price that when you bought the property. Normally that value is higher than the inspection made by the tax office, because normally has not happened, or the catastral value. So normally the value that we include on property is the purchase value. Is the value that you got when you bought the property normally. Okay, maybe if, for example, today I have some clients that say, well, I bought the property in 1970s. Okay, well, probably the value is too low. Maybe but it's not in Spain, it's a different country. Maybe the tax office in that country has a recheck that value, updated in terms of a tax value. Okay.
Pedro, Brian is saying about inheritance tax here. Right. The good news here, Brian, is that the community of Valencian community, which is Castellón province, Valencia province, and Alicante province, the inheritance tax has been pretty much eliminated or reduced to 99% off. So whatever tax you are supposed to pay in Group 1, which is husband, wife, children, or grandchildren, is being reduced. Whatever tax you need to pay after the allowance of 100,000 euros, after the allowance of 150,000 euros on main property, then you will pay the tax, which is only 99% off, and then the 1% of the tax is what you pay. Okay. In a lot of cases, it's pretty much tax-free. So this is true. This is coming into force, or it came into force from 28th of May last year. Okay. And that's good news. Pedro, Steve is asking here, saying, well, let's suppose, I mean, he's a 5 years tax resident in Spain, but he still have a lot of ties in the UK, like family, resident, etc., etc. My understanding, if he's got a TIE, if he spent more than 183 days in Spain, if you double check, Steve, the dual taxation treaty between UK and Spain, I think it's Article 3, you'll see very clear that that's the first rule. Is only if you spend 50 and 50 when you will need to value and disclose where is the center of interest. But my understanding, Steve, is that you will be considered tax resident in Spain for the year. Pedro, any interesting question?
Let me check this question. I mean, Steve, what can you say about UK if you are a 5-year resident? He's spending more than 5 years in Spain as a resident, who spent less than 180 days in Spain, but spent sufficient time in the UK. So it says less than, this is what I understand, who spends less than 180 days in
That's
Spain.
what I understand, correct.
But spend sufficient time in the UK to be considered tax resident. Okay. One of the issues, Ignacio, and we've been dealing with that many times, that when someone can prove, in this case, I think it's 92 days in the UK, when you are a resident in the UK and you are in sometimes tax resident, and also you be compulsory to be tax resident in Spain, and you show us and prove that you are tax resident in the UK. And in terms of UK-Spain double taxation treaty, where you have a property in Spain, but you have a property in the UK, where you can, in some terms, you could be considered resident in both countries. But in this case, it is saying that it's less than 180 days in Spain. So it is considered, in my opinion, that is a tax resident in the UK, not in Spain. Okay.
Right, good. More things, Pedro. I think Guillermo just brought a good point here. People were saying about different, let's say people here are having one property in Madrid, one property in Alicante, and one property. It will really depend on the amount of day you spend in every single property or community. Okay, I know it's a difficult one. I know it's right. And bear in mind, they might be checking water and electricity bills. Okay, so you always have an angle here. I always say, Pedro, your tax declaration is a self-assessment exercise, but you could always get a letter later on, and the tax office could say, okay, could you prove what you just said? And then you will need to provide all this paperwork. All this paperwork needs to be recorded or saved in your files up to 4 years. Okay, so that's quite important for you to know in Spain. Right, more questions here, Pedro, before we go. I know it's hard to answer all of them because we're having a lot of them. Beverly is saying, oh, if you have inherited money from your parents, what will be the tax in Spain? Obviously, as I said, Beverly, I'm pretty sure. I mean, I'll need to have the figure. How much money have you inherited? But I'm pretty much sure that it's going to be either tax-free or very little tax. Okay, because again, 99% of the tax is exempt. Okay, but we're talking about Comunidad Valenciana at the moment about this situation. I know Andalusia, I think Michael is not here today, but I think it's up to a million euros. And Madrid, I think, is the same. Okay. The tuition payment for private school is not an allowance in Spain. Okay. And the good thing, if you are 65 or older and on your main property, you will not pay tax, okay, which is a very good news. The other day, Pedro was with somebody who was expecting to pay with capital gain tax, but they were over 65 and they sold their main property, and therefore they've been living more than 3 years over there, and it's tax-free. Now, Pedro, what else would you like to add? Would you like to say anything here, Pedro, about any other question?
I think we, let me just check the latest ones.
I did a touch for people, just for those who still have questions.
If you have inherited money from your parents, what would be a bit tax? Well, we need to value that, but it's been reduced drastically. If you are resident in Spain, you receive inheritance. I mean, it is not just tax whatever you receive assets that are in Spain, worldwide asset at the end, according to the double taxation treaties at the end. But obviously, we should evaluate it, but it's reduced drastically, 99%. And then it says also by leaning inheritance tax for stepchildren. Okay, it's treated as children. Well, stepchildren. That's a good point. We need to.
My understanding is that they're excluded because they are not your children, not the blood children.
Could be included in the civil registry, and sometimes according to be included as a children, really, even though it's a stepchildren. That's
it could be discussed. Yeah, it's important to make a proper will here as well, Pedro, isn't it? I mean, but yes, my understanding, unless Guillermo says something opposite, is the stepchildren. If I know your blood children, they only get an allowance of 9,000 euros, but that's it. That's it. But then if you want to do planning, Pedro, I don't know whether register like your main children, but that I'm not sure if we have some confirmation about that. Right. More things. Are we? Well, obviously, probably we didn't answer all of them because it's impossible in 1 hour of our time to cover everything. If you have a specific question, I always say here, to save time and money, do tax planning with any of the experts, even with ourselves or whoever you choose. I think it's money well spent, it's worth it, it's peace of mind, stress-free. And I don't like the situation when you just end up doing your income tax return and you have a bill here and you never expect it. Okay, I'm gonna. Is there anything else, Pedro, you would like to add to the webinar today?
Nothing else. There are some questions. I apologize if we couldn't answer all of them. There are some. I'm watching right now. Some of one that is okay. Anyway, I mean, by Chris, someone which is 65 or older are still eligible for capital gains on a property in the UK if you arrive in March. I mean, what we said before is if someone has a property and then becomes resident, obviously it's compulsory when you become tax resident. And in this case, the general answer, I would say yes. It's exempt. Okay. It is considered permanent home. I mean, this is in this case has been living more than 3 years. Is whenever it's sold has at that time of a date 65 years old. This is why I understand. As a permanent home is for those ones that are not exempt, it is combined the following 2 years in order to sell the property or buy another property in order to get benefit. It's a good point because it's something that is very relevant and is really good to to get and to be exempt or not, or maybe reinvest and get exempt on some capital gains.
Well, I did post you here, Pedro, a lot of information. For those who you missed, you just go in the chat. You've got the link, and go into our website. What we do, taxes, and try to read the general conditions. In the meanwhile, if you go to our blog, there are a lot of articles about tax. I think it's worth looking into them in case it applies to you. Right. Okay, we're running out of time. We thank you for your time here as well. Thank you, Pedro.
Thank you.
I know
Thank you very much, everyone.
You're very busy. Guillermo is very busy with the tax season, and I thank you as well for him. Juanfran is very busy, but we still make an effort to give you a little bit of light on this world where taxes are an issue, and we really need to have full control of our personal circumstances. I'm going to pass over to Juanfran with just a video that he always likes to play on. As I said, if you really like to see us, visit us, or do a video conference, feel free to do. This webinar will be recorded, and you will have it in our website from tomorrow. I think probably from today. You have a lot of webinars, probably about 100 already. Pick the ones that were good. Sorry, we are in a rush.
Yeah, it's really good, Ignacio. Let me just point out that we have a lot of clients that they listen to the videos, they come to our office to see you and to see me. And I'm surprised when they tell us, oh, I know you, I've been listening to you some hours. And I'm impressed because obviously it's probably the first appointment and I never met them. And they say, no, already what you're going to explain, I already listened to you in your webinar. So that's fantastic. That's a fantastic tool in order to understand, because sometimes it's difficult for us to explain and sometimes obviously to clients to understand. But it's a really good tool when it's recorded so they can take it. And so sometimes we try to explain better, but sometimes it's difficult for us also.
As I said, there is plenty of information in our website that is just for you. It takes us a lot of time, a lot of resources, a lot of effort, but it's for you to take in. And then if you need to speak to us, then we go straight to your main problem, and hopefully we'll be able to give you advice and take it from there. Again, Pedro, thank you for your time. Guillermo, thank you for your time. Juanfran, to you, just send us a nice video and we'll see everybody if they want to join us in 2 weeks or any possible time. Over to you, Juanfran.
Trust is vital when you're in another country. If you want to buy a home, set up business relationships, or apply for a residence permit, you need to be able to count on the best independent legal aid. Pellicer and Heredia is an international firm of lawyers with over 20 years' experience and one single aim: for you to live at ease in Spain. In order to give you a clear, streamlined, and fast response, we work with a cross-disciplinary team of professionals specializing in the main legal fields: civil law, foreigners' affairs, business law, tax and financial law, and international law. And to ensure that you're kept informed and up to date with everything, we have 6 offices on the Eastern Coast. Whether you're from here or abroad, we will always stand by you and speak your language. Our relationship is based on openness, professionalism, and a commitment to finding legal solutions in your best interests and for your peace of mind. Pellicer and Heredia, international lawyers.